On April 6, 2020, significant changes were implemented in the IR35 regulations that affected medium to large businesses, defined as those with a turnover of £10 million or more per year. This reform shifted the responsibility for determining the employment status of workers from individual contractors, those providing services through their personal service companies, PSCs, to the hiring organizations themselves. This change aimed to improve compliance with tax laws and ensure that workers who effectively operate as employees while utilizing the flexibility of a self-employed status pay appropriate taxes. The implications of this reform have been profound, particularly for businesses that rely on flexible labor, and it has also placed an increased burden on HR departments to correctly classify worker status. The essence of the IR35 legislation is to identify whether a contractor is genuinely self-employed or operating as a disguised employee. The criteria used by Revenue and Customs, HMRC, to assess this status include several key factors. Primarily, the ability of the worker to set their own rates plays a critical role. If a contractor can negotiate their fees freely, this typically indicates self-employment. Conversely, if a business dictates payment structures and rates, it suggests an employee relationship. Another important criterion is the degree of control exercised by the employer over the worker. For instance, if an employer determines where and when work is performed, this can indicate that the individual is an employee, rather than a self-employed contractor. Self-employed individuals usually have the autonomy to choose their work location and hours, allowing them to maintain a flexible work arrangement. The nature of engagement with multiple clients is also a significant factor in determining employment status. If a contractor works for more than one client within a tax year, it strengthens their case for being classified as self-employed. This diversity of engagement indicates independence and less dependence on any single client, which is characteristic of self-employment. In addition to these criteria, HMRC also examines aspects such as mutuality of obligation, a concept describing whether there is an expectation for continued work beyond specific assignments, and whether benefits typically associated with employment are provided, like holiday pay or sick leave. The presence of these benefits generally leans towards an employee classification rather than that of a self-employed individual. The implications for businesses are substantial. They must undertake careful assessments of each contractor's status under the new rule to avoid potential liabilities for unpaid taxes and national insurance contributions. Businesses that fail to comply could face significant financial penalties. Consequently, many organizations have sought legal advice or employed dedicated compliance officers to navigate this complex landscape. Moreover, this shift in responsibility has led to increased scrutiny over existing contracts and working arrangements. Many firms have opted to review their engagements with contractors proactively and adjust contracts accordingly to align with IR35 requirements. Such reviews often entail renegotiating terms to ensure clarity on the nature of the working relationship. Furthermore, businesses may have found themselves reassessing their reliance on contractors due to the complexity and potential liabilities associated with IR35 compliance. Some organizations have even chosen to bring contractors in-house as permanent employees, particularly in roles that demand continuous engagement. As a result of these changes, many contractors have experienced shifts in their working arrangements as well. Some have seen their income affected due to reassessments made by clients or reduced contract opportunities as businesses alter their workforce strategies in response to IR35 reform. This situation has prompted a need for increased awareness and education around IR35 among both contractors and hiring organizations alike. Workshops, seminars, and online resources have emerged as vital tools in aiding both parties in understanding their rights, responsibilities, and options within this new framework. Moreover, stakeholders have raised concerns about potential unintended consequences resulting from these regulations. For example, there are worries that these changes may stifle entrepreneurship among skilled professionals who prefer the flexibility afforded by self-employment, but now face barriers to continuing such arrangements without incurring financial risk. In summary, While the objective of IR35 reform was rooted in ensuring tax equity across employment statuses, its implementation has led to complexities affecting both businesses and contractors alike. As firms navigate this new landscape, ongoing dialogue around best practices and compliance strategies will be essential for all parties involved. This discussion underscores how regulatory frameworks can significantly reshape labor markets and compel organizations to rethink how they engage with talent outside traditional employment models. The changes post-April 2020 necessitate vigilance, not only in understanding legal obligations, but also in fostering environments that respect workers' rights while maintaining fiscal responsibility. To conclude, businesses are now operating under an environment where misclassification can lead not only to financial ramifications, but also reputational damage among stakeholders and clients alike. With careful planning, informed decision-making processes about worker classification can mitigate risks while ensuring compliance with evolving tax legislation surrounding IR35. As we look toward future adjustments in labor regulations globally, it remains crucial for stakeholders across sectors, businesses, contractors, policymakers, to engage collaboratively in discussions that shape fair frameworks accommodating both organizational needs and workers' rights effectively.